please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A record-breaking day on Dalal Street as indices ended at highest levels ever since the Nifty saw a gap-up open and continued its up move to end with gains of about 0.75%. So let's pull that up for you. Sensex, as you can see, gained over 200 points. Today, the broader markets outperformed. The mid-caps ended at yet another record of about 20,421. The star of today's trading session were clearly the auto stocks. That index rallied about 3.5% in today's session. Let's bring in Anuj Singhal with a wrap of today's trading action. Anuj, stellar day for the bulls today.
Phenomenal day for the market, and I don't say that because we had all-time closing high on the markets, on the indices like Sensex and Nifty. I say that because it was a broad-based rally through the day. We had very strong advance decline ratio. The markets are rallying because a big and huge overhang is over. The BJP has won Gujarat, the status quo is intact, and politics as a risk is out of its way, and the market just moving on. Global tailwinds, of course, also resuming, and local buying has been strong for some time now. Auto stocks, what a phenomenal move in that pack, led by Maruti, which had a huge surge. In fact, I would want to see the delivery buying in stocks like Maruti and Mahindra. Not just that, Eicher, Tata Motors, Bajaj, all these stocks were surging. Other index gainers included names like UPL, Vedanta, ICICI and Bharti, and huge gainers in the non-index stocks, Delta Corp, Gen Irrigation, BEML, Amara Raja, L&T Finance Holdings, Page Industries. Tell you something, tomorrow morning we should hit all-time highs, and once we do that, the previous resistance should now act as support. That's been the template of this market.
Okay, we could hit an all-time high tomorrow morning. Anuj, thanks for joining in with that. Let's talk about one story that the market will focus on. The Board of Market Regulator, SEBI, will get into a huddle on the 28th of December. Sources tell Network 18 that 17 issues will be on the agenda during that meeting. Also, the focus will be on the guidelines regarding the disclosure of default by listed companies. Remember, in October, the market regulator had shelved the plan to roll out those specific norms. Sources now tell us that SEBI is planning to water down the initial proposal and clear a relaxed set of norms for disclosure of default by listed companies. That's a CNBC Awaaz exclusive. Let's put this into perspective. Surbhi Upadhyay is joining in with more. Surbhi, why had the market regulator shelved this plan earlier, and what could a relaxed set of guidelines really mean for the markets?
Very, very important development, Kritika. Now, here's a bit of a background. It was back in August of this year when the market regulator first put out the thought of coming out with these disclosure guidelines. What happens as of now, as of current regulations, is that if there are debt instruments, let's say like NCDs, non-convertible debentures, or foreign currency convertible bonds, and then if there's a delay in payments or a default of some sort, that a listed company has to disclose immediately. But no such laws are in force with respect to the large chunk of loans that Indian companies take from Indian banks. And this is what the market regulator was aiming to do, to bring more transparency. Why was it deferred and put in abeyance? Because there was a huge panic within the market community, within the banking sector actually, because a lot of bankers felt that this could really freeze up the whole system. A lot of issues and questions were raised. How do you describe default? If there is a legitimate, let's say, one-day delay or two-day delays because of a bank holiday or because of certain working capital payments coming through, and therefore a company couldn't meet the payment deadline, will that also be a default? Because that could then, set in chain a whole different sequence of events. It could raise questions. It could sort of cause a lot of disruptions within the borrowing and lending framework. So there were a lot of grey areas. What sort of loans should be declared as default? If it's a simple working capital loan vis-a-vis a term loan, so then how do you sort of account for this? Back then, bankers had told us that perhaps there's a need to consider options. Maybe look at a window. Let's say if a company hasn't repaid in a span of a couple of days, 3, 4, 5, 6 days, and then there is no payment coming in, then there is a need to disclose to the stock exchanges. So these were some ideas that were floating around at the time. The market regulator recognized that there needs to be a more measured approach before this kind of a rollout is put in motion. Greater disclosure is, of course, always welcome, but the issue was how do you bring it about? And I think now last 2-3 months, those kind of deliberations would have happened. So it'll be very interesting to see the final version of these guidelines if they are announced in that 20th December board meet.
Oh, absolutely. That's something we'll be tracking very closely. Thanks, Urbi, for taking us through that. We'll address those flashes on your screen in just a bit, but let's talk about the big story of the day. Finance Minister Arun Jaitley has said that the central government is in favour of bringing petroleum products under the ambit of the goods and services tax, responding to a question by former Finance Minister P. Chidambaram on what's preventing the Modi government from bringing petroleum products under GST. The FM said that the centre is awaiting a consensus among states on that issue. In fact, hitting back at the former FM, Jaitley said that the UPA government very cleverly kept petroleum out of the GST draft document, knowing that it will be a deal breaker with states. Here's the war of words that ensued today.
Now that the BJP is in power in 19 states, as they rightfully claim, and they are in power in centre, what prevents the government from moving the GST Council to decide that petroleum products should be immediately brought under GST?
UPA well knew that it will be a deal breaker if you between the centre and the states if you bring petroleum in, and therefore you did not even make an effort. Now that you are in opposition, you have a far greater flexibility in reversing your position. It's only when the states decide and agree upon it that the council will have the power to then decide to bring the petroleum into the GST. As far as the central government is concerned, we are in favour of bringing it. Let me categorically state this.
Now, the war of words between Finance Minister Arun Jaitley and his predecessor from the Congress, P. Chidambaram, were not the only highlight of today's session. The upper house today saw repeated disruptions and had to be adjourned for the day as Congress members denounced allegations raised by Prime Minister Narendra Modi against Manmohan Singh and demanded an apology. Modi had earlier alleged that Manmohan Singh, along with the former army chief and a former vice president, had conspired with Pakistan to influence the Gujarat Assembly elections at a rally in Palanpur today. Agitated Congress member of Parliament trooped to the chairman's podium, raising slogans against the Prime Minister after their notice to discuss the matter under Rule 267 was rejected. The Lok Sabha too saw similar disruptions. Let's bring in Rituparna Bhuyan, who was tracking all that action today. Ritu, take us through the other highlights.
Well, apart from the slogans that the Congress members made today, we also saw the Trinamool Congress protesting against the FRDI bill. This happened outside the Parliament building. But remember that sources have already told us that the FRDI bill is unlikely to be taken up in this session of winter session because the joint parliamentary panel will need more time to analyze it. Apart from that, we also saw several CAG reports being tabled, including one in which the CAG audited 5 telecom companies, and that audit, according to CAG, shows that these 5 telecom companies either did not pay or short-paid the government around rupees 2,578 crores in license fee or license fee and SUC. Tata Teleservices Maharashtra topped the list with dues of around 1,893 crores according to CAG. Last but not the least, there was also an interesting report that was submitted by the Parliamentary Panel on Commerce, which has sought total exemption on GST for exporters. According to this panel, the implementation of GST has not been done properly. GSTN should have been tested properly before it was rolled out. And the same panel has said that as far as job works are concerned, as far as reverse charge is concerned, there should be a total change in rules and rules for as far as GST is concerned. Last but not the least, the same panel has also recommended that as far as GST on export related freight is concerned, be it through air, sea or train, there should be exemption of GST. It remains to be seen, of course, if the GST panel, if these proposals are taken to the GST panel and if the GST panel agrees to these recommendations by the parliamentary panel. With that, it's back to you.
Oh, yes, that's something that's going to be watched for very carefully. Thanks, Ritu, for taking us through that. Meanwhile, Rahul Gandhi spoke to the media for the first time after the Gujarat and Himachal Assembly poll results. The newly anointed Congress president said that the election results in Gujarat was a moral victory for the Congress party and a massive jolt for the BJP. Further, Rahul hit out at the Prime Minister Narendra Modi, asserting that the Gujarat verdict drove home the point that the Prime Minister had a credibility problem.
मोदी जी की credibility पे बहुत बड़ा सवाल उठ गया है, and frankly, मोदी जी has a credibility problem, and he will find it very difficult. उनको बहुत मुश्किल लगेगा, क्योंकि जो वो कह रहे हैं, वो उनकी जो forces हैं, उनका जो संगठन है, उसको वो repeat कर रहा है, मगर देश उसको सुन नहीं रहा है. ये गुजरात के चुनाव ने दिखाया, और ये आपको आने वाले समय में बहुत अच्छी तरह दिखेगा।
Okay, now BJP's victory in Gujarat and Himachal Pradesh has strengthened its hold in the country. The Saffron Party has won 9 out of the 17 polls held after 2014. The NDA now has governments in 19 states across the country. What does this really mean for stock markets, and how is the street reading Modi's win in these major elections? Ekta Batra is here with the street view. Ekta, what are brokerages telling you?
Well, I'll start with Credit Suisse, which has said in its brokerage note post the elections that the BJP has improved its vote share in Gujarat, which is the best since 2002. But the BJP would definitely note the drop in vote shares in the rural areas as well as amongst the youth. Hence, they expect the budget to probably be focused on farm distress, but they do not expect a fiscal slippage. Moving on to CLSA, they have said that basically the government could adopt a political as well as a populist tone in the union budget. The situation is complicated by the likely weak fiscal position that the government is facing at this point in time, and the lower GST collections becomes a bigger concern for FY19 and not FY18. Motilal had a very positive view. They said that winning the UP as well as the Gujarat elections after demonetization and GST reaffirms Modi's popularity. Winning augurs well from a reform perspective as well in terms of the election, and the reform momentum, however, should moderate as there is a busy election calendar ahead of us. And lastly, Kotak says that they do not see a major shift in the government policies. The government may continue with the execution of reforms in the area of fiscal and investment.
Okay, fair enough, Ekta. Thanks for joining in with that. We'll take a quick break. On the other side, here's what's lined up.
I should imagine that the $5 billion dream can be achieved.
Titan MD Bhaskar Bhatt lays out the company's growth map in an exclusive to CNBC TV 18. Says that they target $5 billion revenue by 2025. More after the break. All right, let's cut across to the big headline coming in from Tata Steel. The flashes are on your screens. The board of the steel major has approved the next phase of expansion of its Kalinganagar plant. The expansion will cost the firm a whopping 23,500 crore rupees. Now, remember, the reason this is important is that Tata Steel had put on hold a lot of the domestic expansion that they were aiming at, because there was the issue of the Europe consolidation needing to play out before they could put their neck out and invest in the domestic space. Now, the phase 1 of Kalinganagar had already gone through. That is complete. The phase 2 was the next step, which was necessary for Kalinganagar plant to go in terms of full capacity, full steam, and actually see some kind of turnaround as far as profits are concerned. So now they have announced, and the board meeting has cleared, that the capacity of Kalinganagar will be expanded by 5 MTPA to 8 MTPA. This is a target that has been kept in mind. Eventually, they are looking to go up to 10 MTPA, but 8 MTPA is significant. So the investment that has been approved is 23,500 crore rupees. For this, the company has also approved fundraising via a right issue of 12,800 crore rupees. Just to put this into perspective, not only is this one of the largest investment coming in by Tata Steel in the last 4 years' time, this is also the largest rights issue in the last, I think, 5 years. They had looked at a rights issue about 3 years ago, which hadn't gone through. They had gone through with a small rights issue of about $200 to $250 million, but 12,800 crore rupees is one of the largest rights issue that we have seen for Tata Steel. We will get you a metal analyst to put this into perspective. The reason this is important, remember, is that Tata Steel can now go ahead and expand in the domestic space, which is what they have been focusing on. So far, they have been focused on the European consolidation. They have been looking at the joint venture with Thyssen Group, and the next phase. And remember, this is something that N. Chandrasekaran had confirmed in his interview with Shireen Bhan, that yes, they are looking at domestic expansion rapidly for Tata Steel, and this is what will take them to the next leg of growth. Significant development. We will address this and get you analysts to put some perspective into this, perhaps the company as well. But for now, let's move on to another important Tata Group company. In his first interview after being appointed the Tata Sons board, Tata Group veteran Bhaskar Bhatt says that the group's focus will be to increase collaboration between companies and scale up businesses to leadership positions. Speaking exclusively to CNBC TV 18, Bhaskar Bhatt, who is also the managing director at Titan, says that the company aims to hit $5 billion in revenue by 2025. Here's that interview with Priya Sheth.
Chairman Chandra has clearly laid out the way of operating as we go forward, and he was here at Titan, and in his address he talked about being more focused and first establishing an aspiration and then following that up with resourcing and following through on that aspiration, structure and strategizing, and then structure and resourcing. So, and being more agile, but more importantly, I think scaling up businesses to leadership positions.
When you specifically look at the consumer cluster as we speak at the Tata Group, we've seen collaborations happening from Titan. We've seen TCS and Tata Chemicals coming together for Tata Swatch, which was the purifier. I wanted to understand whether such collaborations among the businesses will be the way forward for the Tata Group.
I should imagine it will go up in the coming years. There's been collaboration and cooperation amongst select Tata companies. It has increased in pace in the last few years, but I think the chairman's view is we can do much more, much more, and therefore put in place processes and structures for that to happen.
But speaking specifically about Titan, the company that you've nurtured over the last more than 30 years, of course, at this point in time it has $2 billion as far as revenues are concerned at the end of FY17. And when can we expect a $5 billion kind of number as far as revenues are concerned? Is there a roadmap that you've laid out in terms of 2020, 2025 at Titan?
I think our jewelry business scaling up by 2.5 times by 2022 is one path. Watches similarly, more than doubling itself in 5 years is another path. I should imagine that the $5 billion dream can be achieved.
So would 2025 be a reasonable time frame to take?
I think so. If we are not 35,000 crores by 2025, we would not be doing a good job.
Okay, that is the first time the Titan senior management has pointed out the target for 2025. We'll take a quick break. Up next, auto industry submits a white paper on electric cars. We get you exclusive details on the other side. Don't go anywhere.
आप जितना भी अच्छा खेल लो, जीत के लिए आपको चाहिए एक भरोसेमंद पार्टनर। मेरी तरह पीएनबी से पार्टनरशिप करो और अपने कारोबार का स्कोर तेजी से बढ़ाओ। पीएनबी, मेरा अपना बैंक।
Sarah has matching tiles with each of my stylish outfits. Sarah tiles reflect my style.
Experts and thought leaders from the banking and IT industry came together to discuss digitization, disruptive technologies and innovations in the banking sector. Catch the highlights from India on the Move, Banking on Digitization at these times only on CNBC TV 18. Presented by Standard Chartered Bank.
Welcome back. With the union budget for next year less than 2 months away, various ministries have started putting forth their demands before the government. The Road Ministry is seeking higher allocation this time around. Ashpreet Sethi is here with the details. Ashpreet, take us through what the Road Ministry's demands have been.
Well, yes, so this fiscal, the Road Ministry had received about 64,000 odd crores. Now they've gone ahead and given a proposal for FY19 where they are seeking about 10 to 12% higher budgetary support from the Finance Ministry. In fact, we pick up from sources that they are looking at even a 10 to 12% higher allocation towards safety fund. Now, remember, 5,200 odd crores was given for safety works during this fiscal, but they are asking for more as far as FY19 is concerned. Now, considering the whole aspect as to how the Bharatmala project, the umbrella project, has come into being, the government is looking, and especially the NHAI is looking at about 38,000 kilometers of construction of new highways and expansion of existing highways, for which they will require about 5.35 lakh crore over the next 5 years or till 2022. For that, the NHAI has decided that FY19 there will be a big focus on market borrowing, which includes your EPF, masala bonds. That is what they will be looking at, and even highway monetization. The figure here that they've pegged to the finance ministry is about 60,000 odd crore as per sources. We'll have to wait and see whether a revised proposal will be sent to the finance ministry or not, but this is the proposal which has been sent now.
Okay, Ashri, thanks for joining in with that. Now let's shift focus to another exclusive. The auto industry has submitted a white paper on electric vehicles to the government. The paper proposes an end to the internal combustion engine by 2047 in a bid to make India's automobile market fully electric. Ronaja Banerjee is privy to all the details, and he's here with the details of that consultation paper. Ron, what does the white paper really propose?
Well, yes, we could well be staring at the end of the internal combustion engines as we know it, whether it's petrol or diesel, because we now learn from sources that the auto industry has put its entire weight on backing the government move to go electric. Monday evening, we learned from sources that the auto industry submitted a white paper, which the government wanted them to do, to the Ministry of Power, where the auto industry is now committed to moving entirely to electric, whether they are two-wheelers, cars, commercial vehicles, to pure electric by the year 2047. That is the long-term commitment. In the medium term, the industry has informed the government that by 2030, 40% of all personal cars will run only on electric batteries. So pure electric cars, currently the number is less than 1%. And more importantly, by the year 2030, all public transport will also be 100% will be pure electric. Yes, of course, originally the government wanted the industry moved to entirely to electric by 2030, but it was far too ambitious. Many ministers had also said that that is going to be a tall order to achieve. The industry, in order to do that, has also sought specific fiscal and non-fiscal incentives to prepare for the shift. For instance, it has asked the government that just like in case of home loans, where one can seek income tax deduction under Section 80A of the Income Tax Act, similar provision should also be made for electric cars. They've also sought how there's an inverted duty structure in GST. That should also be corrected as far as electric cars are concerned. Back to you.
Okay, fair enough, Ron. Thanks for joining in with that. Let's move on to Dalal Street. Cab-hailing app Ola is set to enter the food delivery space. The company has acquired Food Panda's India business from German-based delivery Hero Group. Ola has also committed to invest $200 million, or a little over 1,300 crore rupees, in Food Panda's Indian subsidiary. In return, Ola will sell a part of its stake to the delivery company, that is Hero. In 2014, Ola had forayed into the food delivery business with Ola Cafe and had expanded the offering to major metropolitan cities, but that was shut down. With this second attempt at food delivery, Ola will take on Uber Eats, owned by rival Uber, as well as popular food delivery apps like Swiggy as well as Zomato. Well, with that, it's a wrap on this edition of After the Bell. Many thanks for watching. Stay tuned though. Markets Today Talkback will take all the action forward on the other side.